The Commercial Real Estate Show is brought to you by Cone Resnick, forward-thinking advice to navigate business and financial issues. Visit ConeResnick.com. By BB&T, banking, business, and commercial real estate loans. Visit BB&T.com. And Bull Realty, when your business requires proven performance, visit BullRealty.com. And by France Media, providing exposure to the world of commercial real estate. Visit FranceMediaInc.com. Welcome to the Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. Learn market knowledge and best practices to lead to your company's success. And that's whatever type of company you work with and laugh. I believe we have to have some fun along the way. Well, hello, I'm Michael Bull, your host to the world of commercial real estate. Remember, if you've had any questions or comments related to this show or any commercial real estate related endeavors, you're invited to get in touch with us by Ouija board. Yes. Well, you can also connect with us through the Commercial Real Estate Show. Look for your favorite medium there. It could be the Ouija board, I guess, or Facebook, Google+, Twitter, or LinkedIn. You can find them all at the show website. And you will not believe this. You can actually call us on a telephone at numbers 888-612-SHOW. Operators are standing by. I've always wanted to say that, you know. All right, today we're going to look at the industrial real estate market. We pulled together some of the leading experts in the country to help us get a picture of the current market and what to expect moving forward. Please welcome my first guest, Rene Circ, Director of Research at PPR, a CoStar company. Founded in 1987, CoStar conducts expansive, ongoing research to produce and maintain the largest and most comprehensive database of commercial real estate information. Rene, welcome back to the Commercial Real Estate Show.
Hi, Michael. Happy to be here.
Well, thank you, sir. And to get us started, how did the U.S. industrial sector overall perform in the first quarter, and how does that compare to 2012?
You know, we had a really good quarter during the first 3 months of the year. Net absorption in the 54 largest markets across the country came in at about 25 million square feet. Now, to be perfectly honest, maybe it's just me, and the recent performance has lowered what I consider a good quarter because we used to see numbers in the 40 million square foot range. But the 25 million square feet was about 3 times what we saw the first quarter of last year and even the year before. And if you remember, the previous 2 years were actually negative net absorption. So that's actually pretty good news. Now, what I consider really good news is that 43 of the 54 markets actually saw positive results and only 11 saw negative. So that is actually a number you would see widespread positive demand in a normal expansionary cycle. So to sum up, demand is pretty good. Now, on the other side of the equation, we have supply, and that continues to be exceptionally low. Only about 13 million square feet delivered in the first quarter, and only about 38 million square feet was under construction at the end of March. Now, it makes sense to put this in perspective. These 13 million square feet is 2 or 3 times the level that we saw during the depth of the recession. But if you think of the average of during the last expansionary period, about 46 million square feet was being delivered every quarter, and as much as 63 million square feet was delivered in the first quarter of 2006. And on top of that, 150 million square feet was under construction at any given time. So clearly this 38 million square feet versus the 150, a huge, huge drop. So when you put these two things together, you have decent demand and very, very weak supply. Vacancies continue to come down, and now we are standing at about 8.2%, which is 20 bips down from the quarter before and about 100 basis points down from the year earlier. Now, if you think about vacancy rates in this low territory, owners usually talk about when the vacancies are below 10%, the pricing power is with the landlord. If they are above, then the pricing power is with the tenant. And we are just now starting to see that switch. And we saw about 0.6% increase in rents in the quarter over quarter, and about 2.5% year over year. So that's finally we are starting to see that these low vacancy rates are taking hold. They're getting more widespread, and they're starting to push rents up.
Well, that's some good, healthy news for the marketplace. And I guess the lack of supplies is really helping in that regard. So what do you think moving forward? Is that lack of supply going to continue to improve the market in 2013? What do you expect to see?
That's absolutely what's going to be the story. Now, industrial is very easy to develop. You can build a large building in 6 to 9 months. So more developers are, if you will, kicking the tires and roaming the market. So supply will definitely come back. But if you think of the 38 million square feet that's under construction, if you think of the 13 million square feet that is delivered already this year, so we could have up to, let's say 50 million square feet of deliveries, and we are expecting demand to be about 100 million, which will be a 20% increase from last year, but also about 50 million square feet more than these new deliveries, which will result at a market of what that we track of about 10 billion square feet, about another 50 bips of vacancy compression from the beginning of 2013 till the end of 2013, which would put us at around 7.9%, somewhere in that range.
Well, that's good news. And we're talking with Rene Circ, Director of Research at PPR, a CoStar company. And Rene, what about what affects the industrial market? What factors do you think will affect performance moving forward?
Well, if you think of the 2000s, it was all about containerized imports. China joined the World Trade Organization in 2001, end of 2001, and cargo flowing into the port of LA and Long Beach and other ports, but those are by far the largest ones, was going gangbusters. And imports were growing 3.5 times the rate of GDP. And that was the primary driver of the last decade. The secondary driver was home building, of course. Now, if you think of containerized cargo today, it's not growing nearly as strongly. It's growing at about 2% rate. So it's growing probably the 1 times GDP rate versus the 3 times GDP that we saw. So that is something to keep in mind when investors are thinking forward. Some of the markets that were huge winners the last decade may not be to that same extent. And what may make more sense is to start looking at markets that actually could benefit from some of this return of this onshoring and nearshoring. We don't really think that's going to be extremely strong, but it's going to help. I mean, for example, you think of Detroit. Detroit's been a market that essentially peaked in 2000 and was on a downturn for a decade. And now it continues to figure as a top 5 market in terms of demand for a year and a half, and that's not necessarily stopping all that much. So I would say that it's still going to be about distribution. It's still going to be about where people live and where the goods are coming from. But the goods may not be necessarily coming from as much from where they used to. At least, what I would say, the minimum, the growth is not going to be coming in from China, and may be coming from countries like Mexico or even India, which completely changes the distribution network in this country.
Okay, so it sounds like there's some good investment opportunities in some area, and let's turn our focus to investment sales. How did industrial sales volumes and cap rates end up for 2012, and what do you see so far in 2013?
2012 was a good year. It was a year that you would consider normal at about $20 billion trading for the year. Now, that's still about a quarter off what we saw in the peak 2007, but that was an unusually strong year, and it was about nearly 30% increase from the year before. So demand for this sector has been pretty strong on the investment side. And to give you a little bit of insight, we work with a lot of investors, and many investors that historically have not been dedicated industrial investors, or maybe not even industrial investors at all, are starting and calling us and saying, we are interested in this sector. So I think there's going to be more capital flowing into this sector from newcomers, in addition to obviously everybody out there is raising money and trying to place it across the country. So it's good news. Now, what that does, of course, if demand goes up and supply is pretty limited when you think of the Class A properties in Class A markets, pricing is going up, and cap rates are back to where they were before the recession. In some markets, they are even lower, and buildings trading in a 5 cap range in the best markets like Miami and Southern California are not all that unusual. So that is the biggest challenge, and that's going to be the challenge of getting into that sector, that if you want to be in the best markets, you will be potentially priced out of it. And that's why more and more clients are not only calling us and saying, we do want to go into industrial, they're also calling and saying, what are the next markets? Where should we be placing capital? Because the obvious ones, the LAs of the world, are pretty much taken.
Okay, so you've got some great low cap rates if you're a seller in some of those cities, but what about average overall of the country? We're short on the break, but what do you see for average cap rates in industrial?
Well, you do definitely have to segment the market. So the better stuff properties would probably be trading at about 6.5 cap on average. Now, if you start looking at the overall market, and if you start looking at the smaller properties and the flexish properties, light industrial, then you probably have to add another 100 basis points on top of that.
Okay. Rene Circ, thanks for joining us today. We sure appreciate your insight.
Happy to be here. Thank you.
Thank you. And if you'd like more information from CoStar, visit CoStar.com. Stay with us. We have more commercial real estate intel headed your way. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is made available by professionals at Cohn Resnick, BB&T, France Media, and Bull Realty. For more information about these companies or to access additional show podcasts or videos, visit commercialrealestateshow.com.